Welcome to the Compliance 911 Show, a no-nonsense podcast discussing hot topics for today's busy compliance professional. It's everything you wanted to know about regulatory compliance, but we're afraid to ask. And now, here are your hosts, Dean Stockford of M&M Consulting and Len Suzio of GeoDataVision.
Hey, Dean. It's good to see you again today. What exciting topic, regulatory compliance topic, I should say, did you bring for the group to hear today?
Well, it's a good thing we're confined to regulatory compliance because I'm sure you and I could find a myriad of things to talk about, Len, especially in the financial arena. But today I figured I would talk about flood insurance enforcement action showing no signs of slowing down in all the talk about global warming and changes in weather patterns. I thought today would be a good reminder to talk about flood provisions.
So are you talking about flooding bankers with regulations, or are you talking about real floods, Dean? This is a great...
Yeah, your understanding is mainly accurate, Len. Both. No, I'm going to talk a little bit about just the provisions of flood. And while they seem fairly straightforward, we continue to see issues. And flood actually consists of a series of laws which are collectively known as the flood regulations. So there's no specific set of regulations. It's a myriad of laws that make up the what we call the regulations, or which we follow. The National Flood Insurance Program is administered primarily under the National Flood Insurance Act of 1968 and the Flood Disaster Protection Act of 1973. The National Flood Insurance Reform Act of 94 comprehensively revised the federal flood insurance statutes, and then the mandatory flood insurance purchase requirements under the Flood Disaster Protection Act were again significantly amended with the passage of what we call Biggert-Waters Flood Insurance Reform Act of 2012. These statutes actually made changes to the provisions pertaining to what we call forced placement of flood insurance, escrowing of flood insurance premiums and fees, had exemptions for those mandatory flood insurance purchase requirements, and then allowed for what we call the purchase of private flood insurance. And then, of course, it addressed civil money penalties as well.
Well, with all these different laws, I could see why it may get confusing for institutions.
Oh, there's no doubt. It can certainly be a challenge with the various laws.
So with the various laws making up the regulations, Dean, can you highlight key areas of compliance for our audience today?
Yeah, I always like to simplify things as best I can, as you know. So let's jump into the statutory requirements, which apply when we improve real property. That is, a building or a manufactured mobile home is taken as security for a loan. So the lender themselves have responsibilities to determine whether the building or home, manufactured home, offered as security for the loan is or will be located in what we call the special flood hazard area. This should be done as early as possible in the process, and I'll touch on that in just a minute. Document the determination of flood hazard status, whether the building is in low to moderate flood risk area or in a special flood hazard area, on what we call the standard flood hazard determination form. These are updated periodically, so it's important for institutions to ensure that they're using the most recent or correct version. I believe it's I won't even say. I don't want to venture a guess, but just make sure they're using the correct version. And very important is provide notice to the borrower if collateral is or will be located in a special flood hazard area, with the appropriate sample notice, that the notice of flood insurance hazard and the availability of what we call flood disaster assistance. That's not typically the problem of providing the notice. It's providing proof of receipt and including the amount of required coverage when they send that. A lot of times what they do is they provide what we call proof of mailing. Proof of mailing isn't sufficient. It's proof of receipt. We have to know that the borrower received this particular notice, which indicates what the appropriate amount of insurance is. Um, and as I said earlier, when we talk about the determination and ordering that as early in the process as possible, because we've seen some issues relative to that with regulators, in that if you don't order the determination early enough in the process, which is the regulators deem to be a reasonable period of time, and the reasonable period of time is about 10 days, 10 business days, then you could run into problems with notification within a reasonable period of time of the need for flood insurance. So it's a little complicated there. We also have to require that adequate flood insurance is obtained for buildings that are located in special flood hazard areas. And we have to ensure all buildings that are there include coverage, and that they've documented clearly in the file how the amount was determined. We also have to require escrow of flood insurance premiums if escrow is required for other items in the loan, such as their homeowner's insurance or taxes. Could be mortgage insurance as well. During the term of the loan, they have to ensure that flood insurance is maintained or obtained if the lender becomes aware that the building involved subsequently becomes part of special flood hazard area. So they got to have controls in place. They have to have internal monitoring in place to reconcile the tracking between vendors and making sure that everybody that should have coverage has in fact has coverage. And if they don't, then they have to have what we call forced placement procedures in place, so that if the borrower allows the policy to lapse, or if insurance is what we call inadequate, then the financial institution is required to force place insurance, and that should be done as per the notification, which says we will force place after 45 days. So in this case, they should force place on the 46th day to make sure that coverage does not lapse.
So, Dean, these guidelines, as you enumerate them, seem pretty straightforward. Why do you think financial institutions appear to struggle with this kind of compliance?
Yeah, I agree with the provisions do seem relatively straightforward. We've seen numerous violations with significant civil money penalties being assessed. And I believe the driving factor for violations is the lack of adequate internal controls. And flood provisions involve many different areas, as well as origination, underwriting, closing, servicing, etc. And I think that when you involve a lot, it's like all the different hands that go into a cookie jar, and when you involve that many people, it's extremely important to have some sort of a continuity between all of those areas in the flood provisions, to make sure that we're doing what we should be doing, and don't just say, well, it's that department over there that should be doing it, or it's that person that should be doing it. We have to make sure that there's some conduit that pulls everything together for those to ensure compliance with the provisions for flood.
So, Dean, what specific types of issues are you seeing?
Yeah, that's another very good question. And I think many of the issues we've seen more recently relate to what we call commercial properties and contents coverage. But issues do exist with all aspects of the provisions. And I will go into those in just a second. But the contents coverage issue relates to what we call blanket security instrument provisions, which require that all contents, fixtures as collateral for the loan are in fact have appropriate coverage, and so it's kind of a conundrum to some degree, because we first start with what we call the commercial loan approval documentation, and when there is any suggestion that contents are included as part of the collateral, then there has to be a calculation and support within the file as to what the value of those contents are. And then we would look to a policy, a flood policy that would include contents coverage, not building coverage, but contents coverage. Um, Now, I said it's kind of a double-edged sword to some degree, because let's just say that the commercial loan write-up didn't require the contents to be taken, and none of the write-ups were indicated that the contents, but yet there are these blanket provisions in security agreements. And what the regulators have said is, remove those blanket provisions from the security agreement if you have no intent on taking contents as coverage. So, that would require your departments talking with the whoever in legal is drafting the security agreements, so that they don't include it. But other issues that we see, Len, obviously the timeliness for the determinations that are not being done on the standard forms, the most current standard form. The timeliness for notifying somebody of the need for flood insurance, that's always been an issue. And then, of course, the calculation itself of coverage and the minimum amounts, and making sure that we have adequate coverage. Because, as we all know, the borrowers are smarter than all of us. And what they tend to do is they either put too little coverage, they'll modify the premium for coverage, or shortly after the loan closes, they'll call the insurer and decrease the coverage amount to save themselves some money. And the banks are a little bit too complacent and don't pick up on that. And that could be a violation. So those are the things that we see from time to time. And of course, I'm trying to fit this all in a very short period of time. So, but those are a few issues.
Well, maybe we can have our technical person here basically run the recording at a slightly higher speed, like blah, 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 and you can get more in shorter time. Dean, thank you for
Yeah.
this is a very important topic today, and another one that I'm certain our audience is learning from. I just wanted to say thank you for your presentation and say to our audience, this is Len Suzio from GeoDataVision.
And this is Dean Stockford from M&M Consulting saying thank you for listening to today's podcast. And please let us know of any additional topics you'd like to hear in future podcasts.
Thanks for listening to the Compliance 911 Show. If you like the podcast, be sure to subscribe so you don't miss an episode. While you're at it, please give us a like and review to help others find the show. As always, links are in the show notes, and you can always find us online at compliance911show.com. Follow M&M Consulting and GeoDataVision on LinkedIn for all the latest news and information on compliance hot topics.